Good day and welcome to today's webinar. I would be conducting the webinar today. AssetSoft has been engaged in providing consulting services for over 10 years. With this introduction, let's begin with today's webinar. Our topic for today is investment management. Investment management helps in documenting, recording and reporting all the activities starting from investment of money by investors into funds, to investing by funds into various assets and properties. We will cover all the above aspects briefly in today's webinar. In this webinar, we will cover the following topics. We'll begin with a brief introduction to IM and understand what is investment management. Why investment management or IM? Why do we need investment management software? And finally, understanding the different components of IM. As mentioned above, IM consists of 3 components: financial consolidation, capital processing, and investor relationship management. Financial consolidation helps to consolidate the financial statements from the property or asset level to the highest level in the structure. Financial consolidation is required for a variety of reasons, but most importantly, it is needed to determine the performance of the portfolio on an overall basis. Apart from that, consolidation is also required to be in compliance with regulators or government agencies' requirements, and sometimes to be in compliance with accounting standards like IFRS, GAAP, etc. The second component is capital transaction processing, which consists of raising capital calls from investors and distributing returns to investors. The various activities in this process are summarized in the latter part of this webinar. The last component is investor relationship management, which helps track existing and potential investor information, and also managing communications with the investors. As I said before, the consolidation of financial statements is required to ascertain the portfolio performance. Typically, the financial information of property or asset is rolled up to the fund to disclose the consolidated financial statements. The consolidation and elimination happen through each level of organizational structure. In the simple structure as presented in this slide, as an example, the financial information from property or asset level would get rolled up to sub-limited partnership, also called LP, or a holding company level, and the consolidated information of the property and the holding company would then get rolled up to the fund level, whereby the performance would be assessed by the fund managers. To perform consolidations, various tools can be used by the accountants. However, the most commonly used tools are Excel and computer ERPs. Excel can be useful if the portfolio is small and the consolidations are not complex. Excels are very low-cost tools and are very easy to understand. However, as the portfolio size increases, Excels become complicated and more prone to errors. ERPs or computer programs like Yurti Investment Management and MRI software are the most efficient ways of performing large and complex consolidations. There are many standard ERPs available in the market, and they are capable of performing complex consolidations at the click of the button. However, it requires investment in terms of time and money. Initially, we need to ensure that the consolidation rules are properly defined in the system during implementations. Furthermore, ongoing training of employees is required to understand the flow of data in the ERP, so that efficiencies in the operations are achieved. A typical ERP process would make use of different sets of books and levels to consolidate the financial statements from one level to the above. In this example, the accrual books of the property would get rolled up to consolidation books of the holding company, and the eliminations for capital and investments and other intergroup transactions would be posted in elimination books. The same process would be followed for the next level of consolidation, wherein the accrual and consolidated books of the holding company would get rolled up to consolidation books of fund, and the eliminations for capital and investments and other intergroup transactions would be posted in elimination books. The next component of investment management is managing the flow of capital and distribution of returns earned on capital to investors. Usually when the investors commit to investing in the fund, not 100% of the funds are invested in one go, especially in the case of development properties. The money is taken from the investor as and when needed. To inform the investors on the amount of required funds, the capital call is raised on investors. The investor then invests the money in funds, and the money is then sent by the funds to various assets/properties, as needed. The properties then use these funds to earn income. The income or the returns on the invested funds is remitted back to the fund by way of distribution calls. All these activities are included in the domain of investment management. The examples of various tasks involved in the capital transaction processing are summarized in this slide. Typically, the fund will raise the capital call on investors when required and collect the investments from them. A capital call letter is issued to the investors, explaining the amount and the purpose of the money required. The money is then transferred in the downward stream to the property. The property earns the returns and transfers the return back to the fund, who then distributes the return to the investors. In this case, distribution notices are issued by the fund to the investor, explaining the per share and total amount of distribution earned by the investor. Similarly, periodical information in terms of financial performance, as well as the investor's individual balance statement, is sent to the investors as a part of the reporting process. All these activities require ongoing involvement and monitoring of investor accounts. In case of a lesser number of investors, all the above tasks may be done manually, by use of Excels for performing computations and the use of Word to draft capital calls and distribution letters. However, it becomes a very tedious and labor-intensive process as the portfolio and number of investors increase. A well-implemented ERP can not only help to automate the letters and computation, it can also automate the recording of transactions in the books of accounts at various levels of structures. Typically, an ERP would be able to raise the capital calls, issue capital call letters, compute the distribution amounts, issue distribution letters, automate the transfer of money from the bank accounts up and down the structure, and record the transactions appropriately. In addition to that, ERP systems can also help in the computation of various fees and perform waterfall calculations based on the rules defined in the system. Implementing ERPs can drastically reduce the efforts required for managing the capital across various levels. Now let's get a better look at investor relationship management. Typically, a fund not only needs to maintain the information of existing users, but also needs to track potential investors for future deals. In addition to that, it also needs to manage communications with the investors, and also need to answer questions from investors. An ERP, with CRM capabilities to track the information, and having a self-service portal on top of that to manage investor communication, can help to smoothen the entire investor experience. The CRM software can track the investor data and slice and dice the data using various data points. For example, CRM software can help us identify the potential investors in Austin, Texas for residential projects in Austin, Texas. CRM software can help us not only to track generic information of investors, such as name, address, etc. It can also help us store their preferences in terms of investments. In addition to that, self-service portals and mobile apps, which provide investors with real-time data, can greatly enhance the investor experience. It can help with investor communications, such as balance statements, etc., and also provide real-time information about various projects to investors. Having a portal of this kind can also reduce the questions from investors and save time for the accounting team to provide answers to such questions. Furthermore, most of the portals can be customized and branded accordingly to the branding standards of the company. In nutshell, implementing an ERP which integrates all the above activities from end to end, from performing financial consolidations to managing investors' relationships, can definitely help to improve operations. It not only increases the efficiencies of the internal teams, but also enhances investor experience and may help in raising funds efficiently. There are various ERPs available in the market. However, it is advisable to carry out a feasibility study to determine which ERP would suit you best. AssetSoft can assist in conducting feasibility studies, selecting the appropriate ERP based on the studies, implementing and supporting the ERP to improve your operations. Please reach out to AssetSoft for any questions or inquiries.